Good morning and welcome as always to today's 5 with Fitz. You know, it's Friday and I can't wait for the weekend. But before we go, let's talk about the markets because they're really exciting to me. Now, futures were all green this morning, but the markets have quickly split after the opening bell. So as I record this, what that means is the S&P 500 and the Nasdaq are barely green while the Dow is in the red. Now, the official story, of course, and the one you're hearing already smashing around in the media, is that futures were higher because weak jobs data has traders locking in bets that the Fed's going to cut rates at its September meeting. There's even some talk about a half-point supercut. Now, we know better. What's really going on and what you want to pay attention to is that traders are betting on what happens next. The markets have split because risk is getting repriced in real time. Now, I wouldn't be surprised, based on my experience, to see the S&P 500 roll red by the time you watch this, in fact, and maybe even the NASDAQ as well. Why? Because that's how the markets really work. The irony is that earnings are based on what's happened in the past, but prices always reflect what's likely to happen in the future. Ergo, you want to invest forward if you're interested in profits based on where the world's going rather than where it's been. Which reminds me, investing in optimism beats cowering in pessimism every day, any day, over time. Now, here's my playbook today. Number one, Palantir customers can't stop bragging, and that's the point. Palantir has successfully concluded what they call AIPCon 8, the company's biggest confab, and a place where customers line up to voluntarily share how fantastic Palantir's AIP has been. It's the 8th such conference, hence AIPCon 8. Anyway, some of this year's big success stories include American Airlines, which is using Palantir to integrate planning and operations through what they call its vector system, saving tens of millions of dollars in just 1 year by cutting down the ripple effect that delays have on the system and enabling dynamic scheduling. Lear, which is using Palantir's AIP to power its JIT control tower and scheduling agent, which translates into improving production planning, accuracy, and exception handling across all the plants and enabling near real-time slotting of hot jobs that once took days. Then there's Lumen Technology, which is leveraging Foundry and AIP to migrate legacy networks working across roughly 36 different data sources and to automate dispatch, securing billions in the new backbone contracts while also cutting legacy costs. Boy, that's a mouthful. Anyway, Texas DPS, which is the Ranger Special Operations Group, stood up a Foundry instance in under 48 hours during the Kerr County floods, coordinating rescues, helping recover 117 of 119 victims faster than ever before. Then there was Maine Health, which applied AI agents to overturn insurer denials in real time, automating revenue integrity and enabling the system to win more with less. Carpus Maximus sees the day. I still think it's $200. We just may have to be a little more patient. Meanwhile, there is no word from controversial short seller Andrew Left, who almost single-handedly seems to have started the most recent Palantir sell-off by making widely published negative comments about Palantir, and a reminder who in fact faces a spring trial on 1 count of engaging in securities fraud, 17 counts of securities fraud, and making one count of making false statements to federal investigators for what they call a long-running market manipulation scheme. Pay attention to the companies. Here's an investing tip. There is no such thing as easy money on Wall Street. Every investment involves a risk of loss. That's why you want to focus on companies with real products, real sales, and real customers. To paraphrase the late Steve Jobs, if everything you do is customer focused, profits will follow. To which I add, so will stock prices over time. Number 2, Musk's new $1 trillion pay package. I'm a fan. Tesla's board has just proposed a new 12-tranche pay package that could hand Uncle Elon up to 423 million more shares and boost his stake to somewhere between 25 and 29%. Now, first, he's got to pull off what many believe to be impossible. A $2 trillion market cap, 20 million vehicles delivered, and oh yeah, not for nothing, 1 million robotaxis and 1 million AI bots roaming the streets. Now, I think he'll get it done. Love him or hate him, Musk has a long history of pounding naysayers, critics, and non-believers into submission by doing the impossible. Could I be wrong? Yeah, no doubt about it. But could we be right? That's the question you want to focus on. My POV is that something like this is like waving a red flag in front of a raging bull or throwing down a gauntlet in front of a medieval knight that's itching for action. Bet against Musk if you like. I'm not. Number 3 today, Salesforce's stumble reminds me of Adobe's foibles. Now, this one was amazing. I could hardly believe my eyes when I saw Salesforce CEO Mark Benioff grousing about Palantir to CNBC's Jim Cramer earlier this week. I have long maintained that Salesforce.com has never been all that, despite it being a Wall Street darling, and I caught a lot of flack from folks who disagree with me, and I still do, in fact. But here's the thing, Benioff's thinly veiled rant struck me more as whining, and that's not a good look for such a smart guy, in my humble opinion. Here's what I want you to focus on. Salesforce beat on earnings, 291 versus 278 expected, and revenue, 10.24 billion versus 10.14 expected. But the market saw through it. Growth is slowing, guidance is soft, and marketing and commerce products are stumbling. Now, the company, Salesforce, has been stuck in single-digit revenue growth mode since mid-2024, while true AI beneficiaries like Microsoft, NVIDIA, and Palantir, his archenemy evidently, are sprinting ahead. Now, Benioff is trying to convince Wall Street that rolling out Agentforce AI with 6,000 plus paid deals, dropping $8 billion on Informatica, and juicing the buyback program to $50 billion is going to move the needle. AI or not, I'm hard-pressed to see that. The situation reminds me very much of Adobe's stumble a few years back when it struggled to make the transition from its legacy creative suite, remember that, to a cloud-based subscription service, which, myself, we personally left because we couldn't stand it as a company. But that's neither here nor there. What catches my attention is that back then, and like Salesforce today, Adobe faced slowing growth and market skepticism despite strong fundamentals because investors question its ability to innovate and compete with the rapidly evolving tech landscape. Now, Adobe's pivot to Creative Cloud eventually did pay off, but not without painful quarters of flat performance and doubts about its vision. We as a company have never gone back because the experience was so bad, but that's just us. A lot of people do like their products. I'm not one of them. Anyway, the thing to think about is that Salesforce's push into AI with Agentforce feels similarly precarious. Big bets on new tech and acquisitions may take time to bear fruit. Meanwhile, I think the market's impatience could keep pressure on the stock until tangible results emerge. So, investing idea, trade idea, whatever you want to call it, put skis or simply continue to avoid. Number 4, this was cool. Broadcom's mystery customer in a big beat. Hoo-yah. Broadcom reported earnings beating both top and bottom line estimates. Revenue came in at $15.96 billion, a 22% year-over-year increase. GAAP net income was $4.14 billion, swinging from, get this, a $1.88 billion loss last year due to a one-time tax provision, but it's still a loss. And then guidance for Q4 was raised to $17.4 billion, well above Wall Street's $17.02 billion estimate. Now, the stock, of course, popped after Broadcom revealed a $10 billion custom AI chip order from a new client. Now, the street says, and the rumor mill agrees, that the ginormous $10 billion customer driving things is OpenAI. That wouldn't surprise me in the least. At the risk of sounding like a broken record, artificial intelligence will go down as the biggest investing theme in recorded human history. Every business on the planet will adapt, adopt, or die. And the same is true for investors, so you want to pay attention. Invest accordingly, or you will get left behind. There's just simply no two ways about it. Meanwhile, personally, I prefer a few more other focus names with what I consider better upside over time, but that's just me and in keeping with my view of the markets. It's not perfect, but it works for me and the entire OBA family, I might add. I'm super happy for everyone, really amazing, who owns Broadcom, even though I don't and I wish I did. Well done, gang. Well done. And finally, number 5 today, it's Issue Friday, meaning that the September issue of One Bar Ahead drops today, a few hours from now. So, if you're an OBAer, keep an eye on your email. The September issue will come out a few hours from now, and I am super excited to share this month's research with you, along with 2 new recommendations that are poised for what I believe could be some spectacular performance in the months ahead. And if you're not an OBAer, and you're already confident in your strategy and loving your results, that is terrific. My hat's off to you. I am super happy that you've got your bases covered for the simple reason that many investors are still throwing darts against the wall and wondering why they're falling behind. On the other hand, if you'd like some help or simply to help gain the knowledge needed to be a more confident, consistent, and effective investor, I'd like to toss my hat in the ring because that's what we do around here. Many investors, many OBAers tell me that what they've learned has had a life-changing impact. And not just when it comes to markets either. Music to my ears, frankly. Why? Because there's more to life than money. Today's bottom line, spoiler alert. The world will change with or without your approval. So will the financial markets. So, a lot of so's this morning. Focus on what you can control, the tactics, the timing, which stocks you buy, and so on, instead of worrying yourself silly about what you can't. As always, let's make it a great day. Let's finish the week strong. You got this, I promise. And I will see you on Monday. Make it a great weekend. Talk to you then. Cheers.